Hello, hello, hello. Good couple minutes early this morning. How is everyone doing? Had the PCE numbers come out, personal spending numbers. We got consumer sentiment next. Starting again a couple minutes early so we can get through everything. Bob should be on in a few minutes, so I'm going to wait to really discuss those numbers with Bob. Hello, Christoph. Morning. I have to know, why do you use harmonics instead of fib retracement? Because they tested out substantially better for key levels. What do you mean early, huh? This was early. You know, it's 8 a.m. and the countdown's over. Good morning. You're still on 5% Friday. Is that an up or a down? Is that a down 5% Friday, George? Are you back to being bearish? Good morning, Legion. Good morning. What's going to move the market today? Well, the next big thing is consumer sentiment, the final numbers for October. Oh boy, Waka Waka's in the house. Nice. There's no cooking the books on PCE. Don't start. It's 9 a.m. It's 8 a.m. Remember, the only time that matters is the time zone I am in. Okay. All right, we'll jump back to those numbers. I just want to get through some levels. Amazon still crushed. Everything else pretty mixed. Meta, slight up. Exxon and Chevron both beat this morning. Both beat. Remember, earnings this morning, Exxon and Chevron were the two I was going to keep an eye on. I have not yet checked in on Colgate-Palmolive, but that is one I am looking on to see how they were passing it along to the consumer and inflation. So, because a lot of companies have still been able to pass it along to the consumer. And just to tie in, we'll jump back to that. But look, personal spending higher than expected. The consumer has not, well, they have not tapped out from a spending perspective. They might be putting more on credit card, but they're not tapped yet. So, what else? Oh, you know what I should do? Let's see. Sectors, cyclicals down, energy's up. Everything else is mixed in the middle, so nothing to talk about that. Only an 87.5% chance of that 75. I don't know why this is dropping so much. Besides, I'll wait till again Bob gets on. But there is 75. It's 75 again, as confirmed by Tim Ross. Oh, negative gamma still fear and greed in the greed mode. So that's where we sit. Now this is an area I will utilize some key highs and lows. Gonna fine tune this level just a hair. We're gonna get through stuff while we're waiting for Bob. So the key first levels I'm watching into the open. Remember, consumer sentiment at 9. The first is this 38.10. And then the key level is up here. Let me fine tune this right around. You see, so we got a key high right there and confirmed by some other price action, 38.28. Those are the major levels I'm watching to the upside. To the downside, my first area, the first minor area is 38.91. That's where I will start getting, my ears will perk up. The more significant area, see we have this emotional candle close reaffirmed by the spike low and this little support shelf. So 37.91 will perk me up to the bearish side. 37.87 is where I start really watching for the rollover trade. I am, based off this holding up, leaning to the bullish side, especially with the medium, I can't call them longer term because longer term everything's still in sell mode, but the medium term bullish patterns now that PCE is out of the way. All right. So above 38.28, the next major is 38.65 area, 38.65 to 38.70, then roughly to 3,900. We didn't quite get there before. And remember, the first target to the upside is 39.12. We've already held from yesterday the rotation zone. So if we sell and break below today's lows, 37.77 essentially, 37.76.75, I will target yesterday's lows, which is the bottom of the rotation zone and the walkaway trend line from this inverse head and shoulders for key support. So if we don't have a strong eventful day, this will continue cycles rolling over. And remember, weekly cycles still have some room to push higher going into next Wednesday's rate hike decision, which is baked in, but it's going to be anything else that comes out with that from the press conference. That's really going to be the market mover. Also, just from the, so you will go over this more on Sunday, but from the longer term perspective, the first target is dead in line with the weekly rotation zone. So funny how that works. All right. Let's see who's all right, Grand Rising Christoph. Geo's now bearish, Grizzly bearish, so oh boy, you flipped on a dime, George. You were bullish, now you're bearish. Today's going to be explosive to the upside, says Christoph. CL down 2.34% to 71.80. We will look at crude. I am fine, waiting for Bob. I did start early with the countdown. I wanted to get through the markets for everybody. So let me just get back to the NASDAQ, then we'll get to the spiders and the Qs. The Qs, again, the Qs are the weaker. So if we start the breakdown between the S&P and the NASDAQ, on the bearish side, we start breaking down. I focus on the NASDAQ. On the bullish side, I'm more focused on the S&P, or the one that's been leading them all pretty much is the Dow. So those are the key levels I am focused, or the key markets I am focused on from a breakdown or a breakout. This is where I will use the two lows. No, it's not a double bottom, but down below 11,062. Then yesterday's lows after the disastrous print from Amazon, 10,921 to 10,953 is my key support area. Remember, if we do sell off, 10,953.25 is key on a closing basis. Below that, it's into what I call an advanced clear path, and the next target area is roughly 10,800. To the upside, key area, this is coming down. We have emotional candles and a significant level right around there, about 11,292, and then to, of course, 11,300, only 8 NAS points away. Above there would be about 11,420. So 11,004 to 11,420 are the key levels to the upside. And then above there is 11,524 just for, I don't know, in case something strange happens. Let's take a look at the spiders. The spiders. The first thing I'm watching for is the gap fill in the pre-market 379.60. The gap fill is only the 379.98, and then above that. I mean, this is still going to be in a flagging pattern, a nice pullback flagging pattern, which is going to hold the key area. I'll be watching in here for a breakdown besides using the levels in the S&P 377.35 area to about 377.60 is my key support area in here, bumping this down just a bit to this little prior resistance ledge becoming support, coming in right in that area. To the upside, to the upside. Gonna take this down. That's still going to be right here. The emotional candle open. Key verified on this close. 381.62 after the minor gap. And then the next minor level is about 383.75 to the upside. 383.70. If we did go into tank mode, technically the end of this move is about 374.60 to the downside, which I will be focusing on then 372.78, but that's not for today, unless something really weird were to happen. The Qs. Remember the Qs, besides the gap fill play to 272.83. Still 270.50 is the first area. Let me clean up this a bit. And then the next major support is really right about, let me just adjust these levels. No, they're still good. The next key support is 269.22 from the prior run-up. If you want to flip these, yeah, we can flip them. Hold on, let me flip them. Sorry, I got to adjust those numbers. Did not do that correctly. 269.43 is a very key support level, right in front of that 268.30. So this is my key support level right in here. That's the 50% level from this run up. Below there, the major line in the sand is 265.64. So there we go with most of the things that people want to focus on. Dow this morning still holding up. The next major target for the Dow is this 32,609 area. Also, remember yesterday it did not close above 32,142, so I will be focused on that. Why? We could see a reaction here and then a push continued higher for next week. Russell, still inside bar. Key resistance, 1844 to 1850. Key support coming in around 1795. The DAX, again, stalling out at the second target and an inside bar. Remember, the first and second were the highest one. Why? The third target was into the wicks. But not necessarily for today. The next major target is 13,414. The key pullback area is right about 13,020. All right. I'll get Bob on in 1 second. I just want to peek in at notes. 110.24 is my key support. 112 is key resistance. A little pullback so far, so this is going to set up for some nice potential price action next week. And crude, again, pulling back now 1%, but nothing really. We've already hit that stop reduction target for the doubles. Key support is coming in about 86.90 to about 86.25. Next target is 90.52. Now I can bring on the Bob. Here we go. Bob is in the house.
I'm here.
You're here, so now we can really get started. Hey, Bob.
Looks like we're
hey, Bob, did you see? Did you see, Bob? Look. Core PCE actual. I got text right off the bat. It came in better than expected, 5.1. They're going to pivot. I'm like, wait, it's worse than previous.
It's higher than previous.
And people are telling me, I got texts like they're going to pivot because it's coming in at 5.1. I'm like, that's not a good number. But it came in better than expected.
Oh, my God. Those are the same people that when something comes in worse than expected, they say, well, I don't understand. It's better than last month.
Oh, but I mean, I want to get your take on PCE. I have not discussed the numbers yet. Okay. I want your take on that. I want your take on personal income and spending was also beat to the upside.
Yeah.
So let's just get your take. I'm done.
All right. So The only good news here was the core PCE month over month last month being revised down. That's the only good news in terms of people who want the Fed to pause or pivot. And it is not even anywhere close to enough to get them to pause or pivot. Zero chance, at least for this particular meeting. Could they say things are moving in the right direction? Sure, they could say that, but not based off of this number. It would be based off more of the economic data we've seen. Just look across the globe. I mean, Germany, 10.4 versus 10.1. Italy, over 12%. There's very little good news in this particular report. Now, Mike pointed out personal income and personal spending. Okay, the personal income number is nice, okay, because obviously it helps offset inflation costs, but it does not drive inflation lower. It just means people have a tiny bit more money to absorb the inflation that's already in place. And then you look at personal spending. Well, again, not inflation adjusted. So you're looking at 0.6. Part of that could be that prices were higher, and when people spent, they had to spend more. Also, those last two numbers revised higher last month, which offsets the core PCE revision down the previous month. Because you had personal income go from 0.3 to 0.4, personal spending go from 0.5 to 0.6. So both are higher than last month versus the old numbers, unchanged versus the new numbers, higher than expected. And again, I mentioned it yesterday. The core month over month PC is what the Fed is looking at. The year over year is going to eventually have base effects in it, and it might already be starting with this 5.1 figure. You could look at it as the Fed being 3.1% away, in my opinion, from their headline 2% inflation. 4.2% if you're going off of the headline PCE, but they're likely to say, because they don't want to tighten forever, they're likely to say that they need core PCE prices at 2%. They're likely to clarify that sometime in the future. Now, in terms of December, okay, things are slowing down enough on the economic side for them to potentially step down interest rate hikes in December. That's a potential. But it is not for them to, they will not pause based on this data. We still have more data to do before the December meeting. There's going to be quite a bit more data. But they will not step down based off of this data. There's nothing in it that anybody with any sort of reason, economic reason, could say that that's the case.
All right, so we're on the same page.
We are. Those people who said they're going to pivot and went lower, they're like, you guys realize the Fed's own forecast, or the BLS's own forecast, has inflation in 2024 at 2.4%. Now, there's no doubt about it, in my opinion, that they are optimistic. They have to be. They're not going to be out there saying there's a recession coming. They're not going to be doing that. They have to be optimistic. And Powell has even said that when they give estimates, there's usually a range in there. So which way do you think they're going to go on the range? You think they're going to go worst case scenario or best case? Powell's even said they generally put out their best case scenario, but they also have a worst case that they don't put out there because they don't want to give the impression to the public that they're nervous. He said that both in speeches, veiled, and in private conversations with people I know that know him, where he basically said, look, we can't put our worst case out there because that can actually cause economic panic. And that's true. It's 100% true. Very much like the deflationary thing that I talked about yesterday versus disinflation. People think things are going to get worse. They clam up, right? And they don't spend and things get even worse. So yeah, zero positive in this particular number. Mike, whoever texted you, tell them Bob said they're morons.
I've told them they're morons. But again, even using the language of pivot, meaning a slowdown in hiking, it's not a pivot. I'm tired of seeing that even in financial media. It's not a pivot. A pivot, if you're walking down the street, a pivot is you turn around. It does not mean you slow down.
Right.
People do not get this. All right. Any thoughts on consumer sentiment coming out?
I think it's going to be weak. Hey, by the way, keep in mind something here. And I said this yesterday, but I think it's even more important to look at it going forward because the Fed's likely to mention it. The data that we've seen does not have the majority of the rate hike effects in it. It doesn't. So Michigan consumer sentiment does. It has the sort of, because it's an October number, it has sort of peak Fed anxiety in it, right? Because there's the sentiment, the surveys would have been taken probably 2 weeks ago. And the final would be updated a little bit. But by the way, it's not an equity call, me saying this stuff. I'm just saying that in this particular set of data, there's nothing. There's no good news.
All right. So that's where
You're just going to see, Sterling actually touched on it, Mikey. You're just going to see recession fears grow with this kind of a number.
What? Hey, what are your thoughts with this pulling with the November or keep pulling back for this 75? I mean, it was even pretty much confirmed by Timoross that 75's in the bag. So why does this keep pulling back?
It's just, so that's calculated off of actual futures positions in LIBOR and Eurodollars and in SOFR. I suspect that's just pulling back of trading. We'll get closer to 95% as we get closer and closer to the meeting.
All right. Any other? We got a bounce in the dollar today. Anything with that? Japanese. You had the Bank of Japan reiterating their all their bond purchases last night.
I couldn't understand any of that because my connection is bad and you were in and out. I don't know if you can say that again, but
Bank of Japan was reiterating their bond purchase program.
Yeah.
Any thoughts on the U.S. dollar, Japanese yen, or the U.S. dollar in general?
No, I think the U.S. dollar's got a little bit of a rally in it. I think we're probably still in sort of a correction phase for the U.S. dollar, but long term, I don't think the top is in. I suspect if we're looking at the U.S. dollar specifically, it's probably going to shoot up closer to like 111.50 or so. But I don't see it turning around long term, not fundamentally speaking anyway, especially if you look at it. Look, something I said in one of these live streams, I don't know if it was yesterday or if it was Tuesday, or I didn't think it was on Tuesday, whatever. All of this has been happening without the benefit, or Mike would say the detriment of Fed speak to address it. And that's part of what's going on in these markets and in those estimates by the CME Fed Watch tool. Fed speakers have not been around to say, no, we're not actually going to pause. We're not actually going to step down, and we're not actually going to pivot. And I think that's what I'd be watching for. As soon as this Fed meeting is over, watch how many speakers are scheduled. It's going to be nuts.
Any other comments before I let you go?
No, that is it. FOMC meeting, not the actual decision, but the statement and especially the press conference, just huge this week. It's the biggest thing by far out there, bigger than non-farm on Friday.
Yeah, and then we don't get the next key thing until what? The CPI is, I think, November 10th. So
yeah.
So then, I mean, that's all the focus. Again, you said it. It's not the hike because it's that 75. It's going to be what they say. So, all right. Well, thank you for joining us, and we'll let you go. We'll let you go for today.
All right. I'll talk to you guys on Tuesday.
All right. Thank you.
See ya. Hey, guys, real quick. Oh, Mike's gone.
No, you're here. You're here. You're back.
The election will matter quite a bit. I know it's in 2 weeks, but I think we should talk about that. And the other reason I say that, I got invited to Governor DeSantis's election headquarters on election night. I got the invite yesterday. It's in Tampa. I can't go. I mean, there's just going to be too much to do with the markets, but that's going to be a big deal nationally, obviously, and for the markets as well. Because I think if the House and the Senate switch, you can potentially see a pause of policies that, especially with crude oil and things like that. But anyway, we'll talk about that next week.
All right. Thank you.
All right.
All right.
See you guys.
All right, real quick. Sorry I didn't get to all the hellos today. Can we peek in on it? Amazon gap fill is a long way off. Don't get nuts with that. But the key area is going to be right around here with the breakdown zone. And the first key area is here, just right about 100 to 102. I'll have to fine tune that after the open. So that's the upside. And then if it does rally beyond that, you have a significant level right around 106, 106.25. The next key target, it already bounced off 95.60 in pre-post market, is 89.93 on the next rollover play. That's about it on that. Let's just see. CL has a nice 4-hour potential head and shoulders within the targets. Then I do have to jump this morning. This is a very small shoulder. That's super aggressive. It's better on the 1 hour. So that would be, yes, a retracement move but it would not take out this double. That would just be a bigger retracement move. So that's what we have sitting there. All right, I'm just scrolling through to see what else. I think consumer sentiment will be a miss. But then if it's a miss, is that just more the pivot crowd pump back up to say, hey, Fed's going to do something? All right, Sterling, Colgate, EPS 70. I wanted to see Colgate Palmolive 74 in line with estimates, but down from 81 last year, same period. Sales, all right. All right, thank you for that information. No, I'm not going to sing. I'm not going to torture everybody this early in the morning. Good morning, everybody who I missed. Let's see. Free solar has gone from a big red to big miss. All right. Where is Apple this morning? I need to check on that too going into the open. Then I need to jump. All right, Apple looks like a gap up, so that will help give some support and offset the Amazon. So even though, Apple did beat, some of their numbers were not great from a slowdown perspective, but I'm now just watching for them to test the highs over the next couple days. Levels are 148, and then which it should be opening right about there, and then 150 to the upside. With that, I shall chat with everyone later. Sorry, I can't stick around for the open today. Trade safe. Watch for those key moves. Watch for the consumer sentiment in 30 minutes. And if something major happens, I'll try to pop on at lunch. If not, I'll just be back after the close. Bye for now.